Hey folks, welcome to Quantsapp. Today we will learn about few intraday trading strategies wherein we will understand how can we go ahead and trade intraday options with an edge, wherein we will learn few of the buying selling strategies. So when we talk about intraday options trading, one thing which is in our favor is the theta, wherein if we buy options then we are not going to get hurt by theta a lot because we are not going to be in the trade for a very long. It would be just a matter of few hours, right? So if we identify the trend correctly, then intraday options trading would become much more simpler. So we do not need to overcomplicate the systems with a lot of strategies and a lot of legs. So first we will learn how can we identify the trend in the market. There would be n number of ways through which we can identify the trend. We will try to learn couple of those. Okay. So the first way of identifying the trend in the market is such that whenever the instrument breaks the highest call open interest strike price or the put open interest strike price, that is the time we will try to capitalize on that. So let's say Nifty. So for this, we can navigate to option chain. Option chain analytic is accessible to everybody who has signed up with Quantsapp. So you can sign up to the application from the link in the description box below. Now here 220 strike price is the highest call open interest for Bank of Baroda. So 220 call is acting like the resistance that this level most of the call writers are sitting here in expectations of that this strike price may not be broken in this expiry. That is the reason they are going ahead and selling this call option. But will it be 100% of the times that these call writers will be right? No, at some times they are going to fail, right? And the moment they fail, we will try to capitalize on that. So now how I go about it is, let's say if Bank of Baroda's highest call is at 220, the moment it breaks 220 and it sustains above it, I will try to capitalize on the move. The moment Bank of Baroda goes to 221 and above, that is the time I will try to capitalize on the move. Similarly, if you see that whenever you're looking at this data, also see what is happening on the put side. How is the put activity truncated? Wherein if you see a lot of put writing happening around the ATM, if you see in bracket, there are some figures mentioned. These figures are nothing but they are showing us open interest change. So today Bank of Baroda went up. Now why did it went up? Because if you see, the call writers kept on unwinding from all of the strike prices, which has given Bank of Baroda all the move needed to move in the upwards direction. So now, obviously, this unwinding of, let's say, 3 lakhs or 4 lakhs, it hasn't happened on a single take, on a single second, right? It would have been happening throughout the day consistently, where it was very much easily visible. Like on all the call strike, there has been open interest unwinding, and on the put strike, there has been open interest addition leading to up move in Bank of Baroda. So now the idea is that I am not here to create a trade on every given point. Okay, that I don't want to create a trade in every instrument. I will just create a trade when the moment the stock clears the highest call open interest strike price and there is some amount of OI unwinding. Plus, just see if the put writers are also adding. That will give an extra bit of comfort. Now, this was the first way. The other way of doing it would be, by the way, before coming to the other way, what would be my strategy when I am trading such type of trades? Whenever I'm trading such type of trades wherein I'm expecting some fast movement to happen in the instrument, and if the movement doesn't play out, I'm any which ways going to exit. So in such type of trades, my strategy would be that I'll go ahead and buy a simple call option. I'll not complicate my system with spreads and with multi-leg strategies. I'll easily go ahead and buy a call option. If the move works out, that's okay. If the move fails, then I'll just take a stop loss and I'll exit. So that's the simple thing what I'll follow. Now coming to the other aspect. So this is one way of doing it. Now another way is we can simply rely on price action and how the traders are trading it. So this is order trade analytics. Buyer initiated quantity is trying to show us how much quantities were bought on the ask price. Seller initiated quantity is trying to show us how much quantities were sold on the bid price. Alright. Now if you see Bank of Baroda, the reason I'm taking example of Bank of Baroda is because even it was trying to break a lot of call strikes. A lot of call strikes were witnessing unwinding. Okay. Now, if you see huge spike in buyer initiated quantity, now what does that tell you? That aggressive buying is happening on the ask price of Bank of Baroda futures. Now, why people are buying it on the ask price? Because obviously they are expecting some kind of positive movement to happen in the instrument, and we saw a good momentum happening on the upside in Bank of Baroda. Now, when will I exit my trade looking at this? One of the exits would be the moment I see huge spike in the seller initiated quantity, that is the time I will exit. Okay. Elsewhere, I can also manage my risk better using the exponential moving average exponential. Okay, I can use this, and also I can amplify. I basically can sharpen my trades. I can optimize my entries and exits. So now it is simple. The moment it goes, let's say I created a trade here, somewhere here. Now why will I create a trade? Because it was breaking the call open interest strike price, and now the moment it falls below this, the moving average line, I can again exit. Still I would have got significant move if I would have participated anywhere over here. Now, what I need to do if I'm only looking at this indicator, first I can combine it with the highest call break strategy that we learned. Apart from this, what I can do is I can follow a simple strategy, which is the moment a recent swing high, which I typically see this, okay, the moment a recent swing high gets taken out. So let me just mark. So, okay, and let me just color it in black. Okay, now the moment it breaks and I see aggressive buying happening on the ask price. So this swing high could be anything. It could be even a day high getting broken with force and aggressive buying happening on the ask price. That is the time I can create the trade. The moment it goes above 213 and if I'm seeing that aggressive buying is happening on the ask price, why will I not go ahead and create a trade in Bank of Baroda? And I saw good momentum happening over there too. So this thing would work on Nifty, Bank Nifty and stocks as well. I would say that pick up the instruments which are decently liquid and where there is some action happening. Okay. And yes, folks, that was it from this video. Thank you so much for staying tuned along with me up till here, and check out Quantsapp from the link in the description box below. Happy trading.